Okay, so you guys should all be able to see my screen. You just have to click on my name in the little chat and then watch the stream, and you guys will be able to watch the stream.
Jay, on the phone, do you know how to just pull up big screen, just yours?
If you click on it and then rotate sideways, it should be able to go full screen. That work?
Yeah, I got it. I had to
Okay.
change the setting, so
Cool,
I'm
cool, cool.
only seeing people sharing. Thank you.
Okay, cool, cool, cool. So for sure, the first thing I just want to do is orientate you guys to the server because I know a lot of you guys are new. And then the last part of this, I'm just gonna kind of go over a little bit of swing trades and options. Just to get this is gonna be like basics because I know a lot of you guys are new, and so um, the stream will probably be like 30, 45. Probably end around 8 o'clock, just or about an hour, less than an hour, so you guys know the time frame. Um, Obviously you've been orientated with like the top part of the server, our general discussion. This can it could be anything you guys want to talk about. This is our wall of gains where people are throwing up their gains or losses. This is actually the first red day I've ever seen from Mark in a while, so those of you guys that have been in the server for a while, MKO has been killing it, and he also sends us signals for trades. This is introductions. You can, feel free to introduce yourself. You don't have to if you're shy. It's not a big deal. I do say though, if you're gonna introduce yourself, definitely drop your Twitter or IG or whatever, so we could also follow you if we want to, or we could put a name to the face if you feel like it. We like to follow each other. This is how to upgrade. So this is just, I mean, you guys are all already upgraded, so you know how to do that. Before people could get in for free. Um, if you want to invite friends, this is how you invite friends. You have to open up this link and send them the link, and then just let us know. It will get you a free. So right now we're doing for uh, the monthly membership. If you refer someone, you'll just get a free month. So basically, you get your group access for free if you refer some friends. Um, that's just a way we can give back. This is one-on-one client, so everybody who joins gets a one-on-one session with me, and it will be, if you're a complete beginner, we could go over the basics. The one-on-one sessions are like about an hour, and then we do have a one-on-one program if you guys are interested. But like I said, we always like to just work with you guys first and see if it's something that it works for you. And that's a monthly. You guys will be able to hop on and hop off at any time. And Ziggy and I are talking about potentially working together where we create our a one-on-one program that's both of us together, so you can train with uh, Ziggy and me, and we think that's going to be just best for everyone. Ladies chat, we got to support the ladies. We love to see more women getting financial independence, financial literacy. This is going to be our alert channel. It's still in construction, but this is where our official plays will be sent, as well as a lot of plays are sent in market chat and options chat. So just stay posted in those chats because there's a lot of plays that get sent in there as well. And then basic training, live stream archives, that's for you guys to learn yourself. So that one-on-one program, essentially, we're going to teach you how to be a day trader. We're going to teach you, if you go on our YouTube channel, let's see, I'll go to YouTube. If you go to our YouTube channel and check out some of our videos where I'm scalping, that's essentially the goal of the one-on-one program, is to teach you how to be a day trader, meaning like this is how the best day traders in the world make money. You have, let's say, $25,000, You're day trading and you're scalping for 1 or 2 or 3% profit, sometimes 5 or 10% profit at a time. And even 1% profit of 25,000, that's giving you $250 per day trade. You can hit one of these day trades in as little as 30 seconds. I'll place part of this video.
Dollars in 1 minute. Dollar flip. This is our order books today. So you can see right here, dollar flip on a contract, $500 in 1 minute.
So this is essentially just day trading options. So we essentially bought 5 contracts for $16 each, so 1,600. So that's going in with about 10 grand. We sell it for $17.50. That's $1 per contract, which equates to $500 per contract. And then you can see the time frame on this trade. We traded from 8:35 to 8:37. So in 2 minutes, we secured $500 profit, trading with about 10 grand. And so this is essentially what day trading is, or scalping is. And you can do this with options, which is a little more volatile, or you could do this with shares, which is much more risky, much less risky, and more stable in the long run. And most of the biggest day traders in the world do shares, because you're not going to get hit with expiration and time decay.
And just to interject real quickly, I know that options is where the big juicy coins is at. But if you are new to trading, I would never throw you into
pots and pans? Who's got the pots and pans?
I have no idea. I'm in my car.
Okay, I'm sorry.
Can y'all hear me?
Yeah, yep, I can hear you good.
Okay, yeah, so if you could please mute yourself if you're not speaking, that would be great. Love you. Yeah, so if you're completely new to trading, or just investing in general, like if you legitimately just opened a Robinhood, Webull, TD, whatever, a couple of weeks ago, and this is the first time you're really paying attention to the investing because of what's going on, I understand it's very tempting to jump into options, but you're going to get wrecked. And you can hit, but that's like a lottery. You know what I mean? So we definitely want to provide you with the basics of how to, but I do not recommend that you jump in straight into options. If you are not going to go through the paper trading route, which is something we'll speak on, it's basically you get to play with fake money. If you're not going to go that route initially, then I definitely recommend with holding stock, actually buying shares into the companies that you're hearing about or you're interested in. Just keeping in mind that with a lower amount, under 25K, depending on the brokerage you're using, you will be limited to 3 daily trades, 3-day trades in a 7-day rolling period. So just keep that in mind.
Yeah, that's everything she said is completely true. If so, on our website we have a little bit of a breakdown of kind of like the route that we like to take people. And so level 1 being beginner stock market basics, intro to paper trading. So this is literally like introducing to learning how to buy and sell a share. Like if you've never bought and sold a share before, you definitely shouldn't hop into options. Then intermediate is like how to swing trade, analyze charts. So that's going to teaching you how to swing trade those shares and interpret the charts. And then level 3, we finally introduce you to day trading and options, but it's not until towards the end where you fully start to grasp it. And so the reason we tell you this is because this is the best way to do it. You know, we're going to give you the best form and set you up to be successful. And you know, if you don't understand why stocks are moving through understanding how to swing trade and analyze charts, then you are just throwing a dart blind, gambling on the options essentially. And then also what she said with the paper trading, I think that's very true, because a lot of it is, we can only guide you so far. How much work are you willing to put in? Like, how bad do you want it? And so if you're not even paper trading, then we can't, we can help you, but how much can we really help you if you're not actually taking the steps to paper trade? Because I never understood fully and felt confident day trading money until I successfully day traded at a 70% or 80% success rate, hitting a majority of my trades. 20 to 30% of my trades that weren't hitting, I was executing my stop loss perfectly, 5%, 10%, whatever that stop loss was that I was setting, I was perfectly executing it. And that's the issue that people think too, is selling something at a loss is only a loss if you didn't have a plan. And so if you went into a trade, for example, I'll go to, let's see if I can find this one.
Which one are you looking for, Justin?
I'm going to the Apple one just because it's a classic, great example. Right here. So this is a perfect example of a swing trade that like most beginners could execute just off learning a little bit of basic technical analysis, understanding moving averages, and then they could probably knock out this trade. And this is a great example because we have a stop loss. We have a stop loss on it, and then also like a target take profit that we talk about where we're going to take profit later. But the reason you need this is because let's say Apple went down, because obviously you guys can see Apple's way more than $133 now. But if Apple had gone to 107, where I said to put the stop loss, and where was 107, that was this last low. So that's significant because I'm setting my stop loss at the last support level. And so if it breaks my last support level, I'm just going to get out, because you know that if it breaks a support level, it's going to test the next one. So if it breaks 107, we're going to go to 103. So why would I hold through 107 to 103 if I know it's going to most likely go there, especially if it's starting to downtrend and lose support? This is a significant support level. Then it's not looking good. So then you exit and reposition.
Just to cut into what he's saying, for those of you who have no prior knowledge of trading, what he means by stop loss is a set amount of risk that he's willing to take before he closes out his position in the company. What he's talking about support, he's talking about something that we've charted, that you can visibly see on the chart, where the stock holds that price for a set amount of time to where it starts going up again. So we can see where the bounce back occurs. Both tops and bottoms have tops have resistance, bottoms have support levels. So when he's talking about stop losses, that's how far he's willing to let a stock go down before he closes out his position.
Exactly. That's why I love you, because you can explain things simply if it's not like confusing to new people. And that's exactly the case. And then what we're really trying to get to is that what's going to make you successful as a day trader and as a trader in the future is being able to execute that stop loss, because you give anybody in the world money and they're going to be able to take it, right? Anybody can take profit. It's easy to take profit. The hardest thing to do is sell when you're down, right? And lose money. That's way harder than taking profit. But that's actually what will prevent you from being a successful trader, is by bag holding losers. You don't want to bag hold the shit that's down. So my long-term portfolio that I built for myself is only green, and it's only green because if I buy a stock and it goes down a little bit, I'm just gonna get rid of it onto the next one, and I'm essentially just keeping all the winners. And I'm buying in at good prices. I'm not gonna buy Apple when it's way above the moving average at 137, at 130. Why would you buy it when it's way above the moving average, when you know eventually it's gonna come down below the moving average? What's the moving average? It's this purple line right here. So this purple line is what they call the 20-day moving average, and it's essentially when I'm looking at the daily chart and I'm looking at the 20 MA, then I'm looking at the 20-day moving average. If I'm looking at the 1 minute chart and I'm looking at the 20 MA, it would be the 20-minute moving average. But we're looking at the daily chart. The daily chart is the best chart for getting started because it's easy to swing trade the daily chart. Look at the pattern that you see. Anytime Apple is way above the moving average, purple line, significantly 140, but moving average 118. What happens? It sells off and it goes all the way down. Also, what do you notice? Notice that when Apple was all the way at 138, 137, look at the RSI. RSI is the relative strength index. I like to explain it as it's your jetpack fuel. When you're all the way at the top, you're out of fuel. You have to come back down to refuel, and then you can run back up. So RSI will tell us if we're overbought or oversold, and if we're too hot, we have to come down. You should think about taking profit. So at this point, Apple RSI is all the way, it goes 0 to 100. So if RSI is 99, you should probably get out. That's exactly what it was here. It crashed all the way down to 137. So, and on the flip side, we can use stop losses to, we turn stop losses into take profits. So if I bought Apple at, let's say, $110 right here, and then it runs all the way up to 137, now instead of a stop loss, I'm going to have a stop loss, but it's a take profit because my stop is in profit. And to better explain that, if I buy it at $110, it runs all the way up to 137, I could put my take profit at that's below at like $130. And so if Apple falls down to $130, my stop loss will automatically sell my shares. So that's what a stop loss is. So in this scenario, when we was at we bought in at 112, 113, and then our stop losses was 110 or 107. That means if the price goes down to 110 or 107, it's going to automatically sell it for us. And that's the type of trade you want to set up, where if we lose 113 to 107, that's about that's like 5% loss. But then the upside that Apple we knew was going to be tested was 137, and so that's like a 40% gain on your shares or 30% gain on your shares. So even our trade was set up where the risk on the stop loss was only 5%, and our gain on the shares was 30 to 40%, which ended up happening. And so those are the type of trades you want to set up for yourself, where you have you're going to make more money, and if you do lose money, it's going to be a small fraction of what the profit would be.
And also, if you buy shares, even if you do lose money, you just wait a little while longer until it goes up. If it's a good company that you're trading, which you should be trading a good company.
Exactly. So a lot of new traders get caught up in, they get, I wish I had a nice name of it, but it's almost like too many stock syndrome, where every single stock that you read on a forum or come across that people say is good, you want to buy instantly. And it's almost like you got a fever. And it's normal, don't feel bad. And it's normal also to feel overwhelmed. So if in this live stream you feel like you don't know, you absolutely don't even know what I'm saying, like, in time you'll get it. And some of the other live streams that we have in the channel are and in basic training, and those channels are more introductions, so you can keep getting that information in. And then I also just continue to post, training content.
And I'm also available for the ladies in the ladies chat. As I stated, I'm going to be creating the ladies voice. So soon we'll be able to kind of get on and just, talk about our day, how we traded that day, and any questions you guys might want to pick my brain about. I'll be available for you guys.
Yeah, that's awesome. And I just want to touch on what Zig said just about the if you're trading, if you buy a good company, it doesn't matter. And that's only in the case of good companies, and why you should only trade good companies, because you see the price of Apple. I mean, it was 142 today, but it's 137 after hours. But even if you did absolutely what we don't want to teach you, and you did it's common sense once you understand, right? It doesn't make sense to pay 50% more or 30% more than the average person. You want to get in less than the average person, right? That's why 103 was a great buy, or in this case, 107 was a great buy, and then in this case, 113 was a great buy because we were below this purple line. The RSI was low, right? That means we're grabbing a lot of that fuel and we're about to run back up. So all these things are telling us it's not just one thing, it's a lot of different things, and you can't just go on analysis. Sometimes you have to go on hype and fear and news and other things that might influence the market, momentum. But it can make you really successful, and hopefully if you have traded stocks a little bit, and you're relatively new, hopefully this opens your eyes to understanding why buying a stock, at the average investor looks at a chart like this. I mean, how can you even know when to buy or when you should buy on a chart that looks like this? But that's what a majority of people use, right? Like on Robinhood and shit, they just buy a stock based off a chart that looks like this. But now when we get a chart that looks like this, we can actually, it's like we're taking the blinders off, and you can see where you should buy, and you can see where you should sell. And then the great thing is about doing shares with a company like Apple is if you do absolutely what you're not supposed to do and buy at 137 or buy at 128 over here, well, this was in September, so you held for 3 months, and earlier today you were up, you made money, right? You bought at the top. There's memes about people who buy at the top, and you bought at the top, absolutely, basically like a cardinal sin, but Apple did it for you. So that's why Apple's the best. It's always going to be a solid company.
Tesla.
Tesla also. Apple's probably safer than Tesla. Tesla is a little more risky, but you'll get more return, and that's just the way it is. That's life, right? You risk more, you can get more. You want to be more conservative.
Those are cap stocks. So, some of the signals I'll be giving are going to be more small stock, like small cap, not penny stock particularly, but smaller cap, mid cap stocks.
Yeah, and it's not it's not necessarily a bad thing just because the company is small. You just have to understand that a market cap that's $2.4 trillion, for Apple to go up 50%, you need another 1.2 trillion to go into the company. So that's gonna take some time. That might take a year or 2 years, but it's going there. I mean, Apple's gonna go to 10 trillion eventually. So a small cap stock like GameStop, at the time when GameStop was run up, like if we look at GameStop, when Wall Street Bets started pumping GameStop, it was at $4, and I actually had shares at $4 that I sold, and I'm not mad, it's just crazy. And you can see the market cap is $25 billion now, but before GameStop got run up and was at $4, the market cap was like 200 million. So it went from 200 million to 25 billion. So that's, but like you have to understand, it's easier to run a small company up with only 200 million to get to this, where it is right now, versus like you're not going to get this type of gain with Apple stock or a bigger cap stock, just because it takes so much more money to move those, whereas these you don't need that much money to move. So that's the benefit. It's always a little more risk but more return. But how's everybody feeling? Could I get some let's see. Feedback. I think Zen Kitty is she deafened herself.
Yeah, she follows me on Twitter. Hey girl, hey.
She's deafened, so I just messaged her.
What's tomorrow looking like?
Oh, a little this, a little that. What's the VIX at?
The VIX, I was, Jackson and I were looking at buying VIX calls, and we didn't, but I knew VIX was gonna pop for sure.
Two 2 minutes before after hours closed, I went balls deep with Nokia. And what else did I buy? Nokia. I hold it.
Personally, what I'm seeing on what I see with AMC stock is let's see, I'm gonna go to Webull. I think there's gonna be money to be made, and the only way I can guarantee you money is if you scalp it on a day trade. Otherwise,
yeah.
I can't guarantee you to make money overnight. But I know that as soon as this shit opens, RSI is gonna get so low and bottom out. See, this doesn't even show after hours. I wish I could. I wish I could show, but.
Pull up the bot on.
Oh yeah, you're right.
On the Discord.
You're right. Let's see. How do I do like a 1 hour chart?
So you would put. Damn, I don't know how to do the 1 hour.
What do you do for the 3 minutes? C3M, so it'd be C 1 hour and then
3M.
C 1 hour and then AMC. Would that work?
I don't know if it works on the hour.
What did you do?
Might be something different.
C3M. Okay, I'll do that one. Damn, but it ain't got no MAs.
Oh. Mm-hmm.
Here, I'm gonna have to screenshot off my phone and send it.
Yeah. Who's swinging AMC? You swinging AMC?
Yeah, I think that there's gonna be an entry in the morning for sure.
You holding it now?
I'm not holding it. No, I don't. I try not to hold. Like, I'm a scalper now because I don't like holding shit overnight.
You know what? I dedicated 10K to swinging overnight, and I'm holding some AMC bags right now.
It's gonna bounce back, so in the morning you'll be able to at least break even, I think, and it could potentially retest. I think it's gonna.
No, I'm actually okay with holding for a couple of months because I feel like it's gonna do something.
Yeah, I mean all the theaters are reopening, but.
Oh yeah.
I guess what I was trying to show here is. This shit's at $14 now. It was at $19 at open, so that's a huge drop. I mean, it went from 19 to 11, so that's almost 50% drop. I would think that at open it would drill a little bit more and then find a bottom. You'd be looking at this RSI here, and look for that RSI 2 to get to towards like a 1 or less than 0. This RSI 14 would be like a 30 or less. It would be like almost like a, it would be low or whatever you find the bottom. But then as soon as it finds the bottom, it's going to run. So, I mean, I'll be watching it. I can alert you guys in the chat, but that's what I see happening is it's going to bottom out at open or pre-market and then just fly. And you're going to get that quick swing. And then I don't know what it's going to do after there. It's either going to get slapped or keep flying, but it would have to break through here. So like how we were talking about the supports. So ideally, if I'm in this trade and it's at $14, I mean, your absolute least stop loss would be like $11, right? Because that was our last support. But then on the flip side, when we're going up, how do we find our resistance? Well, the last previous highs. So the tops, these are the resistance. So this would be at about $16. This one's at $19. It's significant because it's right before 20, right? So it's the wall before 20. So I would see for sure it would at least test $15-16 tomorrow once it finds a bottom in the morning. It runs up. If it breaks through here, you're for sure going to 19. If it breaks through 19, you're going to go back to, what was the all-time high? $24-25. That's going to be the next test. So that's why knowing, just looking at this shit can help you as a swing trader. As a swing trader, the great thing about swing trading is you can eliminate emotion because you're just going for what you can guarantee. And things you can guarantee is like once it reverses from here, it's going to test this level. You can almost guarantee it will go here and either get slapped and get rejected or break through. If it breaks through, you sell. If it starts to get rejected here, you also sell. What I mean, if it breaks through, you could hold actually. But if it starts to get rejected, you definitely sell. You just, you secured that profit. That's like 8 to 10%, maybe even a little bit more. But then you're also watching this. If it breaks through and you're looking like it has more steam, you could also, then just keep holding it as it runs up and see it, and then watch this level. Is it going to break through or get rejected? If it breaks through, then it keeps going higher. If it gets rejected, you should probably sell. Or you could say, hey, I'm up, sell half your position, let the rest ride. Sorry, keep going.
Nokia today, that was my first real in and out. Like that shit was so volatile. It was giving me like $500 a minute, and I was just in and out. Like I would see it go as soon as it hit 500, I would sell, and I was just doing that shit for like an hour. I was like, you know what? Let me just go ahead and step away from my phone because this shit is like ridiculous.
Yeah, but it shows you like once you have a decently sized account, you can just scalp like that, and then like you don't need to do riskier plays. You can just scalp, and it can be very safe and very consistent, and that's all you do. But you can it's also good to do a little bit of everything. But
yeah, definitely. So you for showing me that method though. I really can't wait to do it along.
No, we're definitely gonna do it more. We're definitely gonna be doing it more. And for sure. So probably go for like another 10-15 minutes, and I guess the last thing I'll go into is options, and then that way it will be a nice little lesson where you guys got a little bit of swing trading and then a little introduction to options. And then I'm also recording this, and then I'll upload it to YouTube. You guys will be able to watch it. But for example, we could do something like AMC, or let's do something like, what stock should we choose? You guys can choose any stock. Apple? Okay, we're just going to do Apple. So for those of you that know
what was our like? Sorry, my bad.
What's up?
I said, what was their earnings like?
I think they beat earnings estimate, but it wasn't anything crazy. So that's why it's down. I think Google is about to release earnings.
So with options and with stock, you want to buy on red days.
Google might announce a crazy earnings. Because look at their last earnings. And I think right now they're making even more money with YouTube ads and everything because everything's becoming more digital. And they're running it up, so
That's probably why.
this might be the one that runs on earnings of big tech.
Yeah.
And okay, so let's do Google. This is a perfect example. So we're anticipating Google to crush earnings. I mean, truly, I am. I'm expecting them to kill it, have something huge like this. If that's the case, I mean, the only downside of earnings is like, I mean, you can see Apple beat their earning estimates, but it wasn't anything significant. It was like barely. Okay, but they beat it, but it was like barely. So it's not too exciting. Stock is down, right? So most of the time when you bet on earnings, just know you're probably going to be wrong most of the time. So that's why I don't really fuck with doing earnings. It's pretty risky.
Tesla got, yeah.
Yeah, I mean, you can get caught up in the earnings thing, and then that becomes kind of an more emotional trade, because you're thinking earnings, but you know, shit, it's probably already priced in. It could be, but in the case we're doing Google, we know that the earnings are going to be released February 2nd. So when we have options and we're going to play earnings, then we're going to look for an option that would expire, you know, maybe February 5th or February 12th. Let's say we do the February 5ths. So an option, we know stocks go up and down, and then through the swing trading and understanding the swing trading, we can know when we should enter, when we should exit. So if we're looking for that nice entry on a daily chart, like that example with Apple that I showed you guys, and then we say, okay, now it's time to buy Apple shares, or in this case, it's time to buy Google. I could actually look at Google. Let's go to Google chart. So we're looking at the daily chart on Google, and actually this is actually not looking too bad, because we got this big red candle, and you can see we're going towards the 20 and the 50 MA. So if it's kind of running on this trend that has been kind of forming here, you know, it's potentially looking like a buy. And then if you look at this trend line that's kind of forming, you can see it's heading towards, you know, the 1900 2000 range. So that's kind of like charting. I mean, it's not perfect, but I like to use charting when I'm looking for supports and looking for entries, because here you can enter Google, but then if it goes down more, you're not going to be surprised because you charted this support trend line, and so you know it's probably most likely going to hit here. But if you just want to enter a little bit now because it's pretty dang close, you can, because you don't know for sure if it's going to bounce there, especially if it's uptrending. It could, you know, take this trend line a little bit higher, but that's not bad. If we look at the 4-hour chart, we're also seeing, you know, it's not bad. And again, just look at these charts, you know, buying below the MAs, the red line, the purple line, and it goes above, you know, and then rebuying here and it goes above. When it's way above the red line, the 50 MA, we sell, right? And then it goes below, we rebuy. So you can't time these perfectly, but it can give you a good idea of where to enter and exit and where it's going. If we're looking at the 1-hour chart, you can see there was a break below this 50-hour moving average. And if you're looking, you know, here you can notice, again, anytime it was below the 50-hour moving average, it wasn't a bad buy. And you can see all of these was here. So, shit, maybe Google might not be bad. Actually, I don't know if actually I'm gonna play any of these because I mean these options are really expensive. But um, if that's the case, and we're gonna bet that it goes up. So with options, with a call, you're betting the price goes up. With a put, you're betting the price goes down. So it's almost like betting on red and black with roulette, except if you're doing your due diligence in charting and stuff like that, then it's not really gambling. And if you give yourself a stop loss, it's not really gambling.
A call that I'm currently playing is Johnson and Johnson for February, and that's one you could probably show because it's a smaller size. Johnson and Johnson 182.50 for 129. It was a lotto. I purchased it on $125. So I purchased it yesterday.
So if it's, you might want to sell that tomorrow, honestly, because if it doesn't hit, it expires worthless. That's the thing.
Well, I mean, I'm not down bad.
Yeah, I mean, if you threw that's the thing is like with options, if you want to gamble $50-$100 and throw a lotto, like yeah, you can do it, and you might hit a lotto 1 out of 10 times, maybe if you're lucky.
Yeah, definitely. But I have a feeling some vaccine news is coming out because they're linked with the new vaccine.
Yeah, well, I mean, what you could always do is exit that position that expires this week, reposition and reposition with a little bit more time. That way, you're not going to get clapped with time decay. Because after tomorrow, if it's nowhere close to 180, it's for sure going to zero.
No, definitely.
Right.
And I bought in at like what?
That's how you can sell options. So the person who sold it to you made that money because they're selling an OTM option that has a really low % chance of hitting. So like if you did the statistics on that, it might have been like a 10% chance of hitting. And so somebody's selling that, taking those odds. The collateral they have to put up is they have to purchase, or they have to put up 100 shares collateral, essentially.
Yeah. Hey, like I said, I'm only down like 1%.
Oh, so that's not bad at all.
No, and I really didn't pay much for it, but I was saying you can show how the process, since the option price is a little bit cheaper than Google.
Yeah.
You can even show puts.
Yeah.
I don't think people talk about puts.
Yeah.
And
So
put season is upon us.
yeah. So essentially, with calls and puts, with options, you can make money whether or not the stock goes up or down. So for example, Johnson & Johnson was down 1.8% today. If you bet the Johnson & Johnson was going to go down, you're up 180%. You're up 220%. So options, you can essentially think of it as you're betting the price goes up or down. If you're right, whatever that percentage is going to be multiplied by anywhere from 5, 10, 20, 50, 100, sometimes even more percent, 100 times. So you could see, right, this is 1.81%, this is 200%. So that's 200 times right there. And so it can be a great way to make money. But you have to be careful because on the flip side, okay, Johnson & Johnson was down, but I bet the price goes up. Well, now I'm down 35% today. Or if I bought these in the money options, I'm only down 10%. So that's why sometimes we like to buy in the money options because one, they don't have as much premium, and two, they're safer and more stable. But again, it's that less risk, a little bit less reward, or if you want high risk, high reward, that's kind of the deal. But you can also find some pretty good valued in the money options as well. Like this 165 call has pretty decent value because in a perfect world, so essentially if I'm buying a call, you're betting the price is going to be $165 by January 29th. So that's what options are. So you're betting a price is going to go up or down to a specific price, which is the strike price, and then it expires on a certain date. So think of your bet is like a ticket that expires on a certain date, and the price that you put on it is what it has to be, in theory. In theory, though, also, we can sell and flip these options before expiration date, so you don't really got to worry about that. And 99.9% of the time, we are not going to be fulfilling these contracts. We're going to be flipping them before expiration. And general
Which
risk,
is what exercise means.
yeah. So we said options is a bet, right? You can bet the price goes up with a call. You can bet the price goes down with a put. And but what is an option? So let's see. I might have a PDF. So this is a little okay. So option is the right to buy or sell. So that's like betting the price goes up or down. But it's the right to buy or sell 100 shares at a specific date, expiration for a specific price, strike price. And so don't let the 100 shares confuse you, because it's like in 1 foot, there's 12 inches. So in one option, there's 100 shares. That's essentially what it is. It's just the unit. And then options is similar to gambling, which is you're betting the price goes up with calls or you're betting the price goes down with puts. That roulette example. But again, if we're doing the due diligence and charting and being smart, then it's not as much gambling. And then also if we're using a stop loss, it's not as much gambling because you're giving yourself a limit on your risk. One options contract control 100 shares. So option contracts, I should say, can trade for 100 times the price, or like 100 times, right? So stock A goes up 1%. My option call could be up 100%, right? That's just an example. It's not always going to be that ratio, but it gives you an idea. So back to that 100 shares, the reason why options have value is because if you called Johnson & Johnson for 140 at January 29th, what does this option give you? Well, it gives you the right to buy 100 shares of Johnson & Johnson for $140 on January 29th. Well, Johnson & Johnson's at 167 today. So a lot of people are going to want that $140 right to buy 100 shares. So that's where the value comes from. And then in theory, where does this value come from? Well, you get the strike price, add it up plus the price, and you get the current share price. So in a perfect world, right, it's 167 and this is 140. So there's $27 difference. So the price of this option is $27. That's because Johnson & Johnson is way higher. You can see some of these $180 calls are only 17 cents. Well, the reason it has no value is because on January 29th, if Johnson & Johnson is still at 167, nobody's going to buy 100 shares for 180 when they could buy it for 167. So all of these are going to expire worthless. So that's why you have to be careful when you're picking your expiration date. Unless you know what you're doing, like Ziggy, at first when you're trading options, you shouldn't be trading options that expire this week. That's way too volatile. You should at least give yourself 2 to 3 weeks at least, I'd say, to a month.
That is why it's called a scratch off, guys. It is a lotto. It is a lottery ticket. it is more than likely not going to pay off.
Yeah. I actually have a nice potential lottery ticket. And this is also a company that Chart Shark Damiano supports and thinks is going to run based off technicals. And I potentially see it too, because what I see forming is a potential golden cross where we get a shorter term moving averages below the long term moving average, which is the 50 MA, and they come from under it and cross above it. So that's potential.
Nice.
And this NAC, it's a mining company, and so when I'm looking at calls and I'm looking at this is actually a pretty decent value, because here is a 50-cent call. So I'm betting the price is going to be 50 cents by May 21st. And to purchase that right, it's only 28 cents. So that's really cheap. And in the case that NAC runs back to its all-time high, which was at in July, August of $2.50, your contract's going to be up huge, like 10x or more. And then some people were saying if it breaks through this, it could go to like $5. So then that would be huge. You'd be up like 50x. And so I wouldn't put a lot of money into this. If you have $25 or $100 that you want to throw around, this is something that has a lot of time also, all the way until May, and it's in the money, so you're not going to get clapped. And in the case that you want to cash out, it's not like it's going to get hit with decay. And also look at here, like this will also give you some perspective. Like, why would you buy the $5 call for 12 cents when you could buy the $2 call for 12 cents? It doesn't make sense. So, or this $3 call, like, I would rather be more in the money and just pay a few more cents, because the upside is way more, right? Even like this dollar call for 20 cents, when I could get for 8 cents more, I could get 50 cents. So these are the type of kind of things you want to look for on contracts, is good value, and you want to see if it makes sense. But that about wraps things up, and I'd like to open it up to questions and just other things that people want to say.
Thank you guys so much for this. It really helped.
Of course, Torty.
You're welcome. Thank you guys for being here.
Yeah, and for those of you that may have popped in late, this was recorded about a 45 minutes to an hour stream, and I'll upload it tonight. Hopefully, it takes a few hours to upload, but hopefully I'll have it up before the end of the night. But is there any questions I could answer? Because I know that was a lot, and a lot of you guys are new, so I definitely want to just make sure I'm not teaching too fast, or if what I'm saying doesn't make sense. I want you guys to feel like you can just, speak up and be like, hey, could you explain that? So does anybody have anything? No. Now I feel like a high school teacher.
I have something. First, thank you for explaining the options. That really helped. Thank you, Siggy, as well, for mentioning earlier in long can hold. I think my question is just like, is there anything particular you guys recommend to keep in mind for tomorrow? Today was like really exhausting and a little draining. So like just any tips on what to expect?
Yes, definitely. So don't give your energy to the market. So what you have to remember, or we should be remembering, is that risk management is super important right now, right? You can't get caught in the euphoria, because at any given time, as we witnessed this morning when everybody was locked out of their account, like, they can manipulate markets, just like the squeezes are happening. There's a lot of gamma squeezes happening, a lot of penny stocks, a lot of tickers are being thrown around, right? So you should not be overextending yourself. This entire year is going to be full of abundance. I promise you. It is there for you. You do not have to run to it. It is coming. Don't play with more than you can afford to lose. Cash is a position. It is a very good position to have and to hold. Remove your emotions. If you're trading from a place of fear, you tend to mess up. So if you find yourself getting
Fear
anxious,
or greed, or fear, greed,
correct,
or impatience,
correct,
and having expectations, like, oh, I should make this, or I have to make this.
This should be fun. Of course, everybody's trading style is going to be different. We all have different goals. Some people are doing this passively. Some people are doing this for, a steady source of income, and just getting financially free. And that is great. However, if you find yourself getting anxious, if you find yourself getting exhausted, drained, put your phone down. I mean, if you don't feel comfortable trading in this market, cash out, hold your cash as a buying opportunity for whenever you're ready. It's okay to walk away. It's okay to put your phone down. It's okay to eat something, go drink your water, take a deep breath, stretch. You should not be feeling paranoid, nervous, anxious, threatened. Like, you should be having fun. This is supposed to be, you're supposed to love what you do, right? And if you're serious about making this a source of, income, you have to enjoy it, Your vibes have to be in alignment with what you're ready to receive, which is prosperity. You're going to do this. So, a tip, just if you're any of those things that I just mentioned, just go ahead and, cash out, sit on the sidelines. It's okay, to sit on your cash. You earned your gains. Don't give it back to the market because you're in a rush or because you feel like you're missing out on something. Like I said, this entire year is going to be full of opportunities. What is coming is coming. You do not need a rush.
Exactly, like trying to force trades, trying to chase stocks when they're running up a lot. It's not worth it majority of the time, unless you're gonna just be in and out in that same day. You can't get caught up in the hype. For sure. Is there anything else anybody would like to say, or questions, or confusions, or anything like that?
Did that answer your question? I know you asked.
Yes, thank you. I appreciate hearing those things.
Yeah, I mean, like, it's the thing I love about what I do and why I love this group so much is because every single person that, like, traders go through the same journey, and so I'm here to try to prevent you from having mistakes that burn a lot, but in a sense you're still gonna get burned, and hopefully I'm pounding it into you that you have to listen to what I'm saying and learn from those lessons and let them be small, hopefully, with my advice, because most traders have to lose tens of thousands before they become successful. I lost almost in Bitcoin, I got into Bitcoin and stocks when it was. I made a lot of money off AMD, but then when I first started, and then I put it all into Bitcoin. Bitcoin ran all the way up, and then it ran all the way down. I lost all that money, like literally like 30 grand, and it made me never want to invest again. But instead of letting that like deter me, eventually it got me to the point where I truly learned. And I don't think if I got triggered like that, I would be successful in where I am today. And if you look at any other trader that posts a trading journey on their YouTube and story of how I went from 10,000 to a million, it's going to be the same exact story. And so we want to be here to support you. And like she said, it can be tough. It can be psychological warfare. And you have to just try to do your best to continue to be your best outside of the market. Like, you're going to be the best trader and the most successful trader when you also align with your greatest version of yourself, mind, body, spirit. You open yourself up to receiving abundance, and you trade from an abundant mindset, but also, knowing that this is not guaranteed. I have to, an abundant mindset is going to take profit when it's there. An abundant mindset will stop out when they see things aren't working their direction, and then an abundant mindset's going to be patient and wait for the trades to come to them instead of trying to force the trades. And that's really how you'll be successful, because once you learn how to trade, the only thing that's going to make you unsuccessful is emotions.
Greed, fear.
Exactly. Being greedy, being emotional, being impatient, not listening to the blueprint.
Yeah, I definitely remind you guys as often as I can to review your, what you're holding, and take and eat your greens where you can. Like, it's okay to take your profit. There will always be a re-entry opportunity. Everything that goes up comes down. Does it all the time. It's a cycle. Shit don't stop.
Yeah. So, but yeah, if that's it and nobody else has anything else to say, I just like to, again, thank you all. And it's awesome to see so many people in here. And I'm just excited to grow with you guys and get to know you guys more. And if you can't tell already, we're a family here. So, it's whatever you guys want to talk about. If you need guidance on something else, you want to hit me up, you need a friend, Ziggy and I are here for you. We're all here for you, here to support you. So don't be too shy.
Y'all have a great night.
All right, I'm going to end the stream. Love all you guys.
All right, thank you. Appreciate it.
Peace.
Thanks, Justin.
All right, see you guys.
Bye, thanks, guys.